This is the Equity Management Academy Mean Reversion Trading weekly podcast for June 20th, 2022. Gold. The Fed is in the way. Summary. The 10-year note has been volatile recently as a consequence of the Fed's announcements to raise rates 0.75%. It's the biggest increase in 28 years. The Fed has been behind the curve since 2021. Now, interest rates have sharply reversed, contrary to the Fed's expectations that inflation was going to be transitory. Fundamentals. The 10-year note has been volatile recently as a consequence of the Fed's announcement to raise rates 0.75%. It is the biggest increase in 28 years. The market has been dictating monetary policy, not the Fed or central bankers. The Fed has been behind the curve since 2021. The Fed claimed inflation would be transitory. It has been the opposite. The amount of money in the system has hit record levels. The Fed balance sheet is more than $9 trillion, doubling in the past few years. So we have a lot of money in the system, which is negative for the purchasing power of the US dollar. The record amount of stimulus that came into the economy took a toll on the whole economy during a time when interest rates were at almost zero. People could borrow basically free money and invest, pumping up prices that led to inflation. More money is chasing fewer goods. Now, interest rates have sharply reversed, contrary to the Fed's expectations that inflation was going to be transitory. Not only is inflation not transitory, but at the same time, Russia invaded Ukraine, which eliminated a significant percentage of food, such as wheat, corn, and sunflower oil, and other commodities, such as oil and natural gas, off the world market. Fertilizer, which affects food stocks, have also been sharply reduced by the war. I think we have seen the consequences yet, relative to what has come in relation to global supplies. Equity Management Academy CEO Patrick MontesDeOca said, the bond market is dictating where interest rates should be. Interest rates have risen more than tenfold in about 24 months. Stocks and digital assets have experienced a massive amount of liquidation. The NASDAQ is down about a third. The stock market is in a bear territory. Digital currencies have seen a major washout. All of it is a consequence of all of the speculation that came into the market during the time of easy money. Now, rising interest rates have popped the bubble of free money, catching a lot of people who were highly leveraged in a highly vulnerable condition. It is probable one of the best things that happened to the market. Millennials have learned a major lesson in the markets. They were probably responsible for much of the speculation, especially in digital currencies. Money that was chasing a quick buck has learned a major lesson. Economic systems do not change overnight. The policy of changing energy, such as crude oil, to green energy is going to take some time. The political implications of green energy is also a major factor in the inflation rate that we have, such as crude oil reaching $120 a barrel. Our debt of more than $30 trillion and debt to GDP ratios of more than 130%, if not more, add to the stress on the global economy. Now, prices are coming down to levels that are extremely attractive for strong buyers. Standard deviation and mean reversion structure NASDAQ. We use the Variable Changing Price Momentum Indicator, VCPMI, which is based on standard deviation to determine when a given market is at an extreme level above or below the mean, and therefore is likely to revert back toward the mean. For the NASDAQ, we are at an extreme level of support below the mean of 11,068.50 based on the weekly VCPMI signal. The market has activated a buy signal. It is 90 to 95% probable that we are going to see a reversion to the mean. The target of the weekly signal is 12,193. We follow the VCPMI regardless of the fundamentals. In stocks, the sentiment is extremely bearish, and the technical data appear extremely bullish too. The VCPMI, however, is a contrarian and is recommending buying the market. If we get above the VCPMI of 11,549, we are going to be in a daily bullish price momentum with sell level targets of 11,630 to 13,055. We are holding long positions in the NASDAQ, and it appears to be reverting. Gold. The market made a low on the 14th of 1806. The weekly buy one level was 1807, which we published last Saturday, June the 5th. Gold activated that buy signal, and the weekly mean was the target of 1860, which was completed. The daily targets of 1831 and the weekly buy one trigger was at the 1841, all of which were activated. Now the weekly signal has been completed. We saw a perfect reversion to the mean, MontesDeOca said. Once the market completed the target, the VCPMI went neutral. And if we close below the sell level, then it activates a bearish price momentum with a target of 1841. Now that level is being completed. Now we are looking to activate a weekly buy trigger from 1841. Once the market goes through those levels, they become support. We have a buy signal again, and the market is likely to move up again. A close above 1841 at the end of the 15-minute bar will activate a weekly buy trigger. Silver also completed a pattern. It did not quite come down to the weekly level, so it has shown more support than gold. Silver appears to be leading the way to higher levels from higher lows. The pattern shows a reversion from an area of accumulation to a new high, and then coming down to test the buy one level of 2153. We could be looking at some major opportunities in these markets, MontesDeOca said. The markets appear to be massively oversold, which suggests we are into the areas where we have some major buyers coming in.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes.
Well, you know what? 8 is fine. 8 is fine? Yes. This is
Good morning, everybody. Patrick MontesDeOca here with Live Trading Talk. I wanted to share that latest Associated Press report that we published and take a look at where the market is in relation to that report that was published on Saturday. One of the things I continue to tell my traders here in the live Discord trading room is basically that when the price is in blue, you're looking at an accumulation area of supply. This is the support area by technical analysts or common wisdom technical analysis. But the algorithm identifies these pivot points. It basically ignites these pivot points into a few different metrics that you can measure visually, you can measure mathematically. The color in blue recommends that this is the area where you do not sell, you do not go short below these levels, even though the price activates a short trigger. This is the area where you do not go short. The probabilities are very low for a short trade. In other words, from B1 level, you're looking at a 90% probability that the market is going to revert back with only a 10% short probability. Even though the market still has a 10% probability when it comes down to B2, which is the 2-to-1 standard deviation extreme below the mean, it has a 95% probability. So that's stretching the rubber band to the extreme where the algorithm identifies it that this is a maximum potential to the extreme before we see buyers come into the market. And that's exactly what happens. And then the buyers come in and it negates all this supply. It takes all of this supply that was previously offered here, and the probabilities begin to work. The inversion or the reversion to the mean unfolds, activates a buy trigger. Daily, the target above is the first target, and then it activates the mean eventually when it closes above the buy one level. So we saw the target of the first trade right here from 21.20 to 21.44. And trading above now, the daily is activating a daily buy trigger with a target of 21.69. But if you look at the weekly average of 21.51, this is the resistance weekly. And so entering into this area of green is entering the standard deviation, the 50-50 standard deviation levels, where it could go either way. It can continue to go up, break above it, or come down and test this blue levels once again. So 21.51 will activate the weekly, and the target of 21.69 is the mean daily, and activating above that, then now you have the weekly and the daily bullish price momentum, which increases the odds and the probabilities that this target up here at the sell 2 level could be completed. We're looking at the math of the market, basically, that takes into account, these levels take into account the fundamentals, pretty much, that we were looking at. So we have activated a kind of we're coming out of a mixed signal between the weekly and the daily, and a close about 21.51 will strengthen the signal of the daily by activating a bullish price momentum. Let's take a look at this, at the gold market here. The gold market, or the gold and silver today, seem to be the opposite of what they were yesterday, and that tells me that the markets are rotating. The pattern in the gold market here, it activated at 1:30 a.m. a buy signal from the buy one level of 1828, and the target, the mean target, was activated of 1837. It was completed, and the sell one level of 1844 was completed. Now, if you take a look at the weekly on the left of the chart, you're looking at 1844 being identified as the weekly average or the weekly mean. And we have a little bit of a conflicting signal between the average, or I should say the market is trading between the sell one level of resistance of 1844 target and 1844 average. So there's a bit of a mixed signal here between the two. Now, the market trading above 1844 will make this level of resistance, if we do not continue to see supply, a level of support. When resistance is broken, it becomes support. But it has come up against the weekly average level of resistance, and it shows a choppy pattern, basically. Yet it's trading higher, than the silver market in the area of standard deviation. Just to clarify, the sell one level or buy one level is a 1-to-1 standard deviation. The buy 2 or sell 2 level is a 2-to-1 standard deviation. And pretty much as a trader, what I'd look to do is buy the blue and sell the red. So we kind of in a neutral zone for gold and silver. Let's take a look at Bitcoin. It's kind of quiet here this morning with the market trading above the daily mean of 20,348 and under the weekly average of 22,672. So we have a little bit of a, again, as well in the Bitcoin market, that the market is trading in the area of standard deviation, and within the area of standard deviation, we're looking at the daily levels of resistance. So the price has to define pretty much the supply and demand at these levels, whether you're getting more buyers in here or more sellers in here. And that basically is a product of the market. So let's allow for the market to do its thing. And we'll take a look and we'll keep an eye on it. Let's take a look at the NASDAQ here. And what we have here is a real interesting picture unfolding here in the NASDAQ, that it is giving us a very strong indication that the market is showing a lot of buyers at a higher level than the weekly level of 10,980. The low that was made last week was 11,068.50. And we saw recently last week this massive correction here and a test of this previous level of support based upon interest rates. The whole scenario that fundamentally the markets are being driven by right now are interest rates. And there is a great element of fear in the market with interest rates, and rightly so. When you take a look at the 10-year note, you know it's moved up about tenfold since 2020. So it essentially has caught anybody that was highly leveraged, that took Uncle Sam's money, free money, and leveraged it even more in instruments like Bitcoin and digital currencies. And what we are seeing right now is pretty much the destruction of that capital that went into this highly speculative, highly leveraged instruments that primarily were the millennials, as I commented in the report, in the AP report, because number one, they didn't come into an economy and understood what inflation was all about. They weren't born in the 70s, so they didn't understand what inflation is, and pretty much they came into a world, a technologically appropriate timing, you might say, for them to come in and speculate on a shift completely into technology, into a virtual economy completely. And obviously, we saw tremendous, tremendous rallies and assets that were created into that space, which was very similar to the dot-com days. You know, that you saw what happened, but yet, even though we saw a massive collapse of that period, the Amazons came out, the Googles came out. You know, there are a lot of companies that came out of there that are major companies right now, particularly in the tech industry. Amazon, you know, Nvidia, you know, there's a whole bunch of them. Even though we've seen a major correction, I think the landscape is being cleared basically by the speculation and dealing with levels that are more realistic, that are offering true value, particularly as we see this U.S. dollar here being at jeopardy. We're looking at the 10-year note coming down to 316, which is taking up some of the pressure on interest rates continuing to go up. And this is very good for the market. I think that's the reason why we're beginning to see the bottom coming in here. And that's the reason why I've been recommending you guys here to get on the long side of equities. In fact, we recommended yesterday to purchase SPXL, which is the long side of the S&P 500. We're looking at a potentially a continuation of the upside on the equity markets. And a kind of a mixed bag, you might say, in precious metals, and I think Bitcoin will continue to follow the NASDAQ as it is following pretty much all the technical stocks, and to a certain degree, it is trading almost like a technical stock. So let's see where the market will take us, but we're almost accomplishing the sell one weekly target of 11,723. And if you're long here, this is where might be a good idea to take some of the profits off the table, hedge, unload, as the market will test and see what it does here. But we are entering the targets of 11,723 to 12,139. Have a great trading day, and I will talk to you real soon, my friends. Take care. Be well.